Good morning and welcome back to Almus Market Mornings. I like this quote by a Vietnamese monk who said, "Hope is important because it makes the present moment less difficult to bear." That's the exact reality of the war today. Hopefulness all around that things might ease up, but Hormuz still remains an active war zone with exchange of fire between the Iranians and US, both claiming it's part of self defense while keeping the cover of ceasefire intact. While we follow war-related updates, there are a few other updates as well. AI-induced rally is strong after Taiwan now South Korean equity markets have overtaken India as the sixth largest equity market, hitting a market cap of $5 trillion against India's $4.8 trillion. The optimism in that pocket is sort of going strong. Good morning, JK. Has anything caught your eye in these sort of recent market moves?
Good morning, Swaraj. Yeah, it's not surprising, the Taiwan market, though it is much smaller country, the market cap is going above that of India. This is mainly driven by the recent AI mania, and Taiwan and Korea have been a big beneficiary of it, and Korean stocks have doubled in this year alone. Whereas Indian stocks have been in a very narrow range, and in fact, you can say that most of the time it is trading on the lower end of the range. So that's not surprising. But that apart, I think generally the world, while it remains hopeful that there will be eventual resolution to the US-Iran war, the timing is very uncertain, and it is quite logical that countries keep preparing themselves for a worse outcome, and because you cannot wait till the last minute for any emerging situations. So therefore, the recent refusal of Iran to recognize the MOU, and then saying that strait will remain closed, and then they even look at closing another route through which the oil passes, and then of course stopping their communications with the US. All these things are definitely not encouraging for oil importing countries. So oil prices making steady progress now towards 100 once again, and that keeps every other market on the edge, particularly in the oil import dependent countries. So that's what even India is facing. Of course, apart from that, now there is, as I said yesterday, focus is now is more on the central bank meetings and the expectation on monetary policy coming up. We have the RBI policy day after tomorrow. And as at the cost of repetition, I should say that the policy will remain unchanged, because I think RBI will be equally concerned about the growth impact than just the inflation. They would want to see if inflation gets broad-based in the coming months, and then there could be some action. However, it doesn't stop them from introducing more measures for containing the rupee weakness. Then, of course, yesterday's data from US, the first number in a series of employment-related data, the JOLTS number, showed a big jump in the job openings, and that was on the face of it quite strong. But then it was just the openings, and the hiring actually came down, and hiring was confined to a few sectors only. Besides that, the quits rate also came down, which means that the employees are holding on to their current jobs for fear of not finding alternate ones if they quit. So it's not all I would say very strong report in every sense, but then there is job opportunities, but then the employees are taking their own time to actually hire. So that's the situation. Possibly they're also waiting to see how the situation evolves going forward. So as I said, everyone is now being cautious. They could be having some optimism going forward, but then their actions are more towards avoiding further risks. So that is what is seen in the macro and the micro level also. Another important thing that we came across was the Eurozone inflation number, which jumped to 3.2% from 3%. And the persistent rise in Eurozone inflation, and the Eurozone also having to come to a situation where they'll have to raise a lot of money to spend on defense and also the energy infrastructure. Both of them are very urgent needs of the hour for the region. Eurozone has to increase their rate because otherwise the inflation is likely to become more broad-based. Already, the services inflation also saw a big jump. Now, ideally, the inflation should have been reflecting more in the goods and not so much in the services. But when the services inflation is also rising, it indicates that there is a hint of broad-based inflation rising. So it is almost certain that ECB will be hiking rate when they meet on 11th of this month. And I think it's not going to end there. There could be a series of rate hikes. Already analysts feel that ECB had overdone the rate cuts by taking it too far lower at 2%. So that is one event that we could definitely look ahead to. The other one that is caught my eye is the Japanese yen, which has come again closer to 160. Now, if you recall, above 160, a couple of months back, Japanese authorities intervened very heavily. Reports say that they spent as much as $74 billion, and this is the highest amount they spent since 2008 for intervention. And to see that the yen is back at 160 even after such a big action is really probably not something that gives comfort to the policymakers. And if they do not intervene again, or if the intervention fails once again to take the dollar yen lower, then I'm definitely staring at 165 in the dollar yen in days to come. Quite on the contrary picture, the Chinese authorities have been allowing their currency to appreciate. It's getting now to key levels, support levels, where we probably could see 6.7 or even 6.8. I think there's a lot of a correction to the long pending overvaluation of the Chinese yuan that is happening. So there is a diverse world of currencies that you can see. Indian rupee steadily weakening and underperforming. Korean won, despite the stock market doing so well, Korean won is also trading closer to all-time lows, because while the domestic investors have been pouring money into the AI stocks, the foreigners have been, there has also been money pouring outside, where they are investing in Japan and the US market. So that's, again, a very in different situation there. Japanese markets are attracting a lot of money even from the US investors. And of course, the Eurozone will see euro dollar is possibly going to get some support from the rate hike. But again, we need to see what the Fed does with their policy move as well. So it's all over the place. Currencies moving in different direction. There is no uniform direction for the dollar right now. All regional development based is what we are seeing in the currencies. Stock markets also not a uniform rise everywhere. Some markets are doing well. Some of the markets like India, Indonesia are still quite subdued. That's what we are seeing. And the Indian market itself, good support below 95, as we have been mentioning. Yesterday, we had another fresh outflow of nearly $1 billion from the FIs, taking the total outflow in just 2 days to over $2.5 billion. And this follows more than $3 billion that was taken out in last month. Now, as rupees, get rather the dollar gets more demand even from FIs and apart from the importers, I'm not sure whether RBI continues to sell more dollars at these levels, because that means they would be subsidizing the dollar purchases from FIs. So I think it's natural that dollar rupee, along with the fact that oil is still once again moving towards 100, should also move towards 96 in the days to come. Of course, the hesitant moves will be because of RBI policy upcoming on Friday, whether they would introduce some strong measures to contain the rupee weakness. However, the natural demand still persists, and that ensures that rupee does not get too much strength in the near term. Thank you.
Thank you, JK. And yes, the broad theme is that there's no uniform direction, whether it's currencies or stock markets. Uh, some pockets are doing well, some not. Even in currencies, even the Korean stock market is doing well. The Korean won is trading close to all-time lows against the dollar. So that's a lot of foreign investors pouring money out of the Korean stocks while the domestic investors prop it up. Even for the rupee, that's the same story. FI outflow has been close to $2 billion in the past 2 days. That's a very significant number. We are also finding rupee steadily weakening towards rupees 96 in the current scenario. Uh, Oil has been, steadily rising, and that sort of is not good for oil importing countries like India. But yeah, overall, I think Friday's NFP and the unemployment data is something to look out for, along with the RBI policy. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.